My name is Meredith Meyer-Grelly. I'm so glad to be here with you today. I have the great honor of leading the Swart Center for Entrepreneurship. The Swart Center is here to serve all of our Carnegie Mellon affiliated founders from all schools. So students, staff, faculty, and alums. We will support about 400 founders. This year, we hope to support you in building the company that you hope to pursue. I'm also a faculty member here at the Tepper School and hold an appointment in the School of Computer Science, where we also work to support founders. So this is the 4th year of the Family Business Leadership Speaker Series, unbelievably, and the 11th talk in this series. We have an incredible speaker who really encapsulates a lot of aspects of entrepreneurship and family business and investing. So a lot of, I know there's folks who are here to hear about a variety of aspects of Michael's work and life, and we're going to try to touch on all of those as best we can in our limited time together today. The Family Business Leadership Series is a joint effort between the Tepper School of Business and the Swart Center for Entrepreneurship. It's supported by incredible sponsors, including BNY Wealth, the Gabriel family, Swank Construction, Howard Hanna, Gemini Food, and PwC. I also want to give a big shout out to Leif Johnson in the back there. Leif, let's give Leif a big round of applause. I am the useless figurehead here today. Leif is the actual doer of everything and has made this event happen, as well as he is the program manager for our family business peer advisory group. So if you are involved in a family firm as a leader, we invite you to join us. We meet up about every 4 to 6 weeks for peer advising sessions. We bring in guest experts to give talks on areas of interest to the participating firms. But more importantly, we dive into areas of challenges or opportunities that each family firm in the cohort is facing, and you get incredible peer guidance from others who understand what it is to lead and exist in a family business. Okay, so I get the privilege of introducing our students who will be introducing and moderating our guest today. And both of our students are leaders of the Private Equity Venture Capital Club here at Carnegie Mellon. The PEVC Club is a campus-wide club focused on educating students about careers in private equity and venture capital investing at everything from the largest funds down to independent sponsors and entrepreneurship through acquisition and search fund opportunities. Their goal is to support aspiring investors, educate students, and support the CMU PEVC ecosystem here on campus. So Mitchell Larson is going to introduce our guests here today. Mitch is a second-year MBA student. He completed his undergraduate at BYU. He has a background in asset management, and he will be joining Wells Fargo Investment Bank Power and Utilities Group after graduation. And our other student here, our incredible student who will be moderating our discussion with our guest, is Charlie Katarincic. He's a junior at the Tepper School, and he's president of the undergraduate PEVC Club. He will be a summer analyst at Piper Sandler this year. He's also on the CMU football team, and very proudly, we're thrilled that he was selected as a member of the 2025 academic all-conference team, scholar athlete, nerdy as they get. So thank you to both of our student leaders for continuing to build this ecosystem here. Mitch, come on up.
Hi, everyone. It's my privilege to be able to introduce Michael, our esteemed speaker here today. Michael is a managing partner of Woodland Management and Partners Edge Fund, as well as the board chair of the Tree of Life. He started, I just jumped around. In these roles, he oversees both the fund's investment committee and serves on the board of several of their portfolio companies that they invest in. Prior to Woodland Management, Michael served as CEO of Polyconcept, a global supplier of promotional merchandise. And under his leadership, Polyconcept was able to grow from a small family business to a company that approached over $1 billion in sales annually. as I mentioned, Michael currently serves as board chair of the reimagined Tree of Life, a national institution being rebuilt on the site of the deadliest anti-Semitic attack in U.S. history, and is also a trustee of Chapman University. Michael holds a bachelor's degree in philosophy from the University of Wisconsin and a Juris Doctorate from the University of Pittsburgh. And we're really grateful to have him here today. And I'm going to turn time over now to Charlie to be able to lead the discussion. Thank you.
Yeah, thank you, Mitch and Meredith, for those great introductions, and thank you for being here today, Michael. So our game plan over the next 40 minutes is to ask you a couple questions to learn more about your operation of your family business and how that's led into your founding and now leading of your family office, Woodland Management, and Partners Edge. And we'll save about 15 or 10 minutes at the end for audience Q&A. So if we can just save those to the end, that'd be great. So jumping right into it, as Mitch mentioned, you ran your family business Leads and Polyconcept for over 20 years, and were actually part of 3 different liquidity events while you were CEO or in a leadership position with those companies. And so our first question is, after a liquidity event like that, how do you maintain your entrepreneurial energy or spirit rather than shifting into more of a preservation approach? And how did that influence the way that you structured your family office, Woodland Management?
Sure. Well, thank you. Can you hear? I hope everybody can hear me. And thank you all for being here, and Meredith for inviting me. So the question of, I don't know if maintaining entrepreneurship and entrepreneurial spirit is a choice. I think it's a composition. And so, building a business, I define for me, entrepreneurship is you're a builder. You see opportunities, you want to optimize that opportunity, you're willing to take on risks to do so. And, from my business experience, I made a lot of mistakes, so learned a lot of lessons. And when it finally became time to step aside, I became an investor, I found that to be an incredibly unsettling experience because, you can't beat the investment world. It's very hard. And as an entrepreneur, I was struggling with what to do with that. And so we eventually found, and I brought entrepreneurial spirits around a goal, a process. How do we think through where do we have a right to win? Where don't we have a right to win? And where can we simply accept being at the market? And, began to take that approach in 2015 in our family office, and moving us from just a passive asset allocator to really an entrepreneurial office around investing. So I don't know if that directly answers the question. But.
No, definitely. Thank you. And I think one thing that is very unique about yourself is the success you've had both as an operator and now as an investor. And so I think you touched on it a little bit to dive more into how your investment philosophy at Woodland has evolved over time. You mentioned a change in 2015 and kind of where the fund is today.
Yeah, well, like many families that have a liquidity event where you've spent, in my case, 20 plus years, my father's case, 50 years of working in a business, all of a sudden you have a lump sum of capital, which, it can be whatever it is. But, figuring out what do you do with that, took a lot of time. We made a lot of mistakes and learned a lot of hard lessons. And being entrepreneurs, though, we kept looking for things and pushing on opportunities. And so we finally found what we believe to be 10 years ago, an opportunity where we're getting paid, we believe, much greater risk-adjusted returns than the risk we're taking. And it allows us to leverage our expertise as operators, as investors, and we can talk about what that is. That's not everything we invest, but we decided that we're going to put a material portion because we're still looking to create wealth through investing. So investing to create wealth is very difficult. Let's be clear. Investing to preserve wealth is typical, but to create wealth, it means you have to be willing to take on risk. And so we do that in a very logical, we think, and disciplined way. And where we're not trying to create wealth, we're not looking to be smarter than the market. We accept we're not better than. So that's how we've structured, and we can get into those details if you wish.
Yeah. So kind of staying with the theme of that entrepreneurial spirit, when we first talked to you a few weeks ago, one thing that I think really stood out was your emphasis on family entrepreneurship over family business. And so as you've leaned kind of more into this family office structure, as you've talked about, how do you intentionally design a entrepreneurial system rather than allowing a single company to kind of define or drive the family's identity?
So the question has a couple different layers of answers. Again, myself, my father, I'm with my brother, and now my son are all in the business. I would say my father and I are very entrepreneurial. We're very restless, and constantly paranoid and looking for opportunities. It's too early to say if my son is. We'll see. And my brother's more preservation oriented. So in order to structure an office, like any business, when you grow a business, you better have a really clear vision as to what you're trying to achieve. So first thing we did is did a 10-year vision. Where do we think we should be? How do we define success? What are those metrics? It's both economic as well as personal, and what's the environment? Then you break that down into actionable 5-year plans, 3-year plans. We have a team, so it's not just family getting in a room and arguing and bringing up, generations of trauma to try and make an investment decision. We actually have, from the very beginning, I hired an office president who's somebody that I think is the smartest person I know, to complement what we do. And we've worked to bring in talent. So goals, processes, and then constantly refining, challenging, and defining. And it's how we ran a business, how we grew the business is no different.
Yeah, definitely. So kind of on that note, maybe to go into a little bit more detail, if there are families out there that are looking to emulate some of your success, especially in that transition, what do you think are some of the first structural or governance moves that a family should make if they're looking to build more entrepreneurship by design rather than by accident?
Yeah, I think one of the structural decisions we made at the very beginning when we set up our own family office, 15 plus years ago, is, and I give my dad a lot of credit for this. He's obviously at a different stage in life. He's not as concerned about wealth creation. He's in wealth preservation mode. I was still in my early 40s. I had a lot I wanted to do. But we decided that it made more sense to collectively pool our capital, because you get into there's always trusts and structures and, money here, money there. And we see a lot of family offices, they invest individually. So if I, want to invest in private equity, we'll set up an investment vehicle where maybe I'm 60% of the share. My dad might be 30%. My brother might be 10%. But we set up a treasury function so that we allow that capital based on a borrowing base, not on cash. So we try and use the family office assets in the most efficient way for all the benefits and use different vehicles to allow different goals to be met. And as long as we have a process that we all agree upon, a discipline around investment decisions, which includes allocation strategies, then we approach it as a board and not as an individual. And I think for me, that's been essential, because disagreements, it gets down to the fundamentals of the business decision, not personal issues, if that makes sense.
Yeah, so it sounds like you have really fostered a very disciplined and organized approach to your family office investing. And so within your time, within your family office over the past 15 years, what are some common blind spots maybe that you see with other family offices in terms of capital allocation?
Well, I can say for sure our blind spots were opportunities, understanding what is the real opportunity set out there. If you've gone from running a business your whole life and then all of a sudden you're investing, Typically your network is going to be your broker, your buddies or friends at the country club or wherever, you talk to people. And so we ended up investing in things that would never meet our criteria today because we had no idea. We just didn't have enough pattern recognition yet of what's investable and what's not. So I would say, having a lot of patience and doing as much upfront work and digging and plugging into networks that are professional and smart, and they're out there. It just takes time to find them. The second is asset allocation. We way over allocated to things that should have received fractional allocations. We thought you write a $250,000 check to a seed round and something. And so you learn over time how to, what is the real likelihood it's going to hit? Why are you doing it? And allocating accordingly. And again, seeking advice, asking lots of questions. Our experience is family offices. You run a family offices, we talk all the time. I mean, most family office operators want to help one another. We've yet to come across any that are saying, yeah, sorry, won't answer those questions.
Thank you. And touching more into kind of your allocation towards private equity, which you guys have really found a successful niche in, one thing that we hear a lot from speakers that come and talk to our club is just how competitive and saturated the buyout market has become. And so how have you positioned Woodland to really play above its weight and generate some of those outsized returns that are becoming more and more rare within the private equity space?
Yeah, Partners Edge.
Sorry.
So Partners Edge Fund is our private equity investment fund, of which our family is a third of the capital. In Fund 1, we have a partner family in Los Angeles that we work closely with. That's a third of the capital. And then we took outside capital from others. And then we just launched Fund 2. What we have found is, again, myself, my father, my president, we're all former operators. That's what we know. We can go and learn about a business and understand it from an operator's perspective, where most private equity funds, and I've worked for 3 private equity funds, they're financial people. They're very strategic. McKinsey, BCG will come in and give a strategy. But the reality is, unless you've been on the ground and you know what it's like to run a business, it's very different. And so we were looking, how can we take our experience and our somewhat limited capital and really figure out how do we get a bigger bang for our buck. And so we kind of stumbled onto an independent sponsor network of private equity fund managers, and we started about 12 years ago investing behind that. And what we have found is there's a huge opportunity set that's below where all the big private equity firms operate. And mostly family or generationally run businesses that need to sell for some reason. They don't know where to go. They're not hiring Harris Williams. They're going to their accountant to market their business. They don't really understand even how easily, for a little bit of investment, they can unlock significant growth. And so we really feel like this is what private equity is meant to be, which is helping these businesses that oftentimes have been around 20, 30, 40 years, have been great lifestyle. How can they actually become more significant businesses? And so we can help our sponsors because as operators, we understand. We've grown businesses. We see things that a bank might not, who you're normally getting capital from. So it's a win-win for both of us, and our track record has been delivering almost 4x net returns over the life of our investing.
Yeah, definitely finding that niche part of the market seems to be a huge point of success for both Partners Edge and Woodland. One thing that we talked about a little bit is how within your experience as an operator, you were really a second generation in terms of your family business, but now with your family office and Partners Edge, you're a first generation. So you have experience with both of those roles. And so to kind of run through all the different stages of family business here, to start, if you were advising a first-generation operator stepping in to a family business, what is some advice you'd give to them?
Well, having been in the shoes of stepping into a business my dad and his partner had started, the reason I became so maniacal around goal-setting process objectives is because the whims of the owners could shift by the day. And I think in family businesses, sometimes it's very hard to get everybody on the same page as to what is it we're actually trying to do. And so for me, it's implementing a process, whatever process works for that business and that team. But as much as, for me, objectives, we need to be aligned around what we're trying to accomplish and how we're going to work together to accomplish it. And to me, that's been the process now with my son coming into our business. That's the framework. If he can thrive within that, great. Yep. And hopefully add to it and take it to a different level. But that to me was first and foremost. And unfortunately for us, we had a great family business, but it wasn't working within that. And so I give my dad a lot of credit. He said, if his partner can't recognize that's how we're going to grow the business, then let's sell the business and allow the team to go. So I think that's the key to success for me, is having really clearly defined processes and goals.
Yeah, we also talked about how it's one of your goals to create something that your kids are really interested in stepping into as well. So if you could give advice to a second-generation operator looking to build the business for their kids, or even a third-generation person such as your son who's stepping in the business now, what are some key advice you would give to them?
I think it's important, and I learned from my dad that he gave me a lot of room. He gave me a lot of room to make mistakes, which I learned from. They're painful when you fail for your family. It's far more painful than when you fail, for a job or a boss. But I think it's essential that creating that safe space, that you can take risks and you're going to live with those consequences, but you're still supported as long as they have the skills. So I think that, trying to create opportunities right now for my son to figure out what he's really interested in, what is he good at, what is he passionate about, and hopefully our office is structured in a way that we can support that. But yeah, I think creating a tolerance for failure and risk within reason is really critically important.
You might have just answered this there, but over the generations, I would think that sometimes the shift can go more towards the preservation side than the wealth generation side. And so as you inherited the business from your dad and now you're getting ready to welcome your son in, are there some key things that you've done to really maintain that entrepreneurial spirit or that wealth creation aspect of the family office?
Well, we're just naturally entrepreneurs, so we're restless. I think that, as I approach 60, hard to say, I'm not going to be looking to grow for wealth for us, because it's only going to create problems anyway. But if our kids want to take what we've built and take it to the next level, then I want to make sure it's a great vehicle for them to do that. Yep. If they don't want it, then at some stage we'll figure it out. But I don't want them to feel obligated to take something that they're not really passionate about.
Definitely. And shifting gears here a little bit, along with all your success in the business world, you also give back a lot to the Pittsburgh community, specifically as the board chair of the Tree of Life. And so could you maybe touch on one governance decision that fundamentally strengthened the organization's long-term trajectory, and how can that teach entrepreneurial families about stewardship?
It's not an easy answer, because the Tree of Life, we're rebuilding. It's a new institution. It's not rebuilding the synagogue, but we created so it's a startup. It's a startup with, unfortunately, an international brand. a lot of passion and a lot of people care, and a mission that's fairly broad and significant. And so it had to be entrepreneurially approached, which it meant bringing in lots of people. I mean, one of the core values, and I didn't mention this earlier, I've surrounded and been blessed to work with people much, much smarter than me, and who remain very close colleagues. And so we grew our business by literally, I had more Harvard MBAs working for me. I'm a philosophy degree from Wisconsin. Law school graduate from Pitt that never practiced. But I knew getting the best and brightest people to collaborate with was essential, and I think we've done that with Tree of Life. If you look at our board, we have an academic advisory committee that's literally, and they're meeting today. I'm actually going from here to that meeting to talk about the development of the museum. We have the CEO who started the 9/11 Museum, the chief curator from the U.S. Holocaust Memorial Museum, the head of a museum in Poland. I mean, if you can afford to get the best talent, I always believe you do that. It pays for itself, in factors of 10. So,
yeah, thank you. I think we're ready probably for some audience questions. If we have anybody that wants to start, Meredith, you have a mic.
We're going to pass this mic around. So if you have a question, we'll start with Alex, and then I'm going to ask Alex to pass it to the next. Leif and I can run too if we need to, but don't start asking your question until you get the mic, because this is how we'll capture it on the video recording, okay?
Thank you, Michael. Alex, and my question has to do with the following. You have addressed and referred mostly to money assets. And in our case, a good amount of the wealth of the family is in land assets. So then part of the family question is, do we want to, and there's a lot of family history related to those assets. So the question is, managing money might be a bit more fluid, whereas how do we deal with the assets? Do you have any comments?
I think that, one, it's a blessing to have a family with a lot of assets, land assets, that if they're long-term valuable, we were not as a family. Our assets came from building businesses and selling businesses. And so, I think it gets to what are the goals. Certainly from a wealth preservation and a number of other benefits we were talking about just before, land assets have a massive benefit to family stability, et cetera. The question is, how do you use those assets to help create more entrepreneurialism for next generations? Because I think we all know, real estate families by third, fourth, fifth generations, it's, what's their ties to those assets and what are they doing to bring value? And I think that, the cash flow and whatever they generate can help fund potentially activities that are meaningful for the next generation. But I'm in no position to talk about management and disposition of land assets. It's unfortunately not an area I have developed enough expertise in.
Thank you.
There was somebody, yeah. And then, yeah.
Hi, thank you, Michael. So you were talking about how you would not like to pass on or force leadership or interest in a business to your kids if they're naturally not interested in it. And I'm curious, what would you say was either the principles, the values, or just like the elements that made you or that your father used in you to get you interested and involved in the business? And how is it different from what you used to educate them and bring up your kids?
It's a great question. So as I mentioned, I was a philosophy major undergrad at Wisconsin, which is coded for I was a Marxist, and in fact, my father took me on a trip he had at the time an import, as he started what was Leeds, it was importing business accessories from China. So on spring break my senior year, he said, let's go to Hong Kong and I'm going to take you to China. And I got into a fight with the factory owner telling him he was exploiting his workers. So I then went to law school because what else does a philosophy major do but delay the inevitable and think they go to law school. And I found myself, environmental law, of course, and by my second year, the only classes that actually made sense to me were contracts, secured transactions, and anything related to business. And in my mind, there was, my dad was a corrupt businessman. I was never going to be that. And, by my third year of law school, I said to my dad, I can't imagine practicing law. It's horrible. And the only thing that makes sense to me is business. And he had this kind of little subsidiary of Leeds, which Leeds was a small business. He's like, come in and you'll run that and you'll see if you like it. So in my mind, I wasn't going to work for my dad. I was running a small little part. I was already selling my soul because I was going to be into business. And within 3 months, he's like, by the way, when you're here, come on over. I have a meeting. I want you. And he literally bait and switched me into the business. It's a long way of saying, for our son who lived in Colorado and was a Lyft operator, who, why don't you, what do you think? I'm just exposing him. And over time, he's like, yeah, I think I'm actually interested. And so it was like creating the safe space to develop the interest. If my dad would have said to me, you're going to come to work for me, I never would have. I would have rejected it outright because that's just what kids do. So I hope that helps.
Thank you for taking the time to talk to us. My family business is in commercial warehousing and real estate. So coming in as a third generation, how do you navigate the challenges of trying to move away from the traditional ways of doing business and trying to change the established way of doing things?
Yeah, well, that's never easy. I guess the question is, are how many at your generation are involved? One.
Just me.
Just you. Well, then you're lucky. The question is if you can make the case for why your ideas might be ideas to test being an important component, then it's convincing the generations who did things very differently and were successful that maybe you have things that are valid as well. And I think it's just creating that dialogue and that willingness and saying, look, because you might be wrong. You don't know, right? And so creating that safe space to push and test and prove yourself takes time. I can tell you in our case, we had to sell our business because my dad's partner couldn't get there. And it was unfortunate because we sold and Bank Boston Capital executed our plan and made 5 times their money in 5 years. But that's the nature of the beast sometimes. So I think it's just, using your skills, not just in your business ideas, but your negotiation skills to get what you want.
Thank you.
Thank you for your time, Michael.
Sure.
My name is Phil, and my question is, speaking specifically to your operator side, how did you discover the best areas that you had as an operator and build a team surrounding the other areas?
Yeah, no, it's a great question. I'm a big picture person. I realized very early on that I'm able to envision something that's not yet there, but be able to see either where an industry was going or if we build this value. So it allows me to look at something over here and abstract how that could apply. That's my gift. I'm horrific, and Amy will attest, to the details. And I completely, like any visionary entrepreneur, underestimate whatever the details are going to require. And so very early on, I was blessed, actually, with one of our first hires as we transitioned to my leadership, to bring on somebody who's still a very close friend and who is very detailed, operationally oriented. And we just formed a partnership. And honestly, and part of it was, for me, even though I was president and it was my family's business, I had to accept. And I treat him as a partner, and so we would fight, argue all the time, but you build a respect. So I talked about collaboration early. I think it's knowing not just what you're good at, but really being honest about what you're absolutely not good at, and finding the people and respecting what they bring to the table. It's critical.
Thank you so much.
Yeah.
Check. Thank you again for coming here to Tepper. My question is, do you have anything surprising when you transition from operator to becoming investor? Is there anything against your intuition or anything surprising for you?
It's a good question. I could give you the trite answer, which it's a lot more boring. In terms of like, now what do I do? As an operator, you open up the door in the morning, turn on the lights. There's tons of stuff coming at you. I think that the hardest part of being a successful operator and transitioning to investment is recognizing how little you actually do know. And you see it all the time, and you see it publicly with leadership at times. Because you're successful doing this, you think it's highly applicable to doing this. And in fact, the more I've experienced, I've learned that a lot of the reasons you were successful over here sometimes are a very narrow set of reasons, and you have to relearn everything somewhere else. And so it's taken time to distill what led to success, and that's where I go back to this notion of process, goals, talent, being clear, and being aware of risks. So I don't know if that answers it, but it's a hard transition to go from an operator where you're a master of your domain into an area where you actually know incredibly little.
I had a question also, Michael. One of the things that we talk about in the peer advisory groups a lot of times is how to manage family dynamics. And you and your brother and your father have worked together for, it seems like, the majority of your career, and for their careers too. What are some of the different techniques that you've used to try to manage those family relationships, both whenever you're working on different business deals, but then also whenever you are just trying to enjoy personal time and personal interactions with those family members?
Nothing. We didn't set out with a set of rules. We've never used an advisor or had, somebody have to mediate. I think I give a lot of credit to my dad for being somebody who puts the highest value on engaging with me, with my brother, with the next generation. That's far more important to him than the success or being right. And so I think that set a tone where, as long as we're capable, you don't want to give responsibility to people who aren't capable of delivering, but if we're all capable, and obviously if you're here, you're capable, then I think creating an environment where it's much more important that we do it together as a family. And we've been through a lot. I mean, we've been through, a lot of disagreements, but I think we've just been blessed to respect each other enough that, we value that relationship. And I don't have any other key or secret than that's just the personalities involved.
Thank you.
I would ask you maybe more on the Partners Edge side. You mentioned that in your second fund now, you're going to have maybe over half of your deals with repeat independent sponsors that you had in your first fund.
Yep.
So what are some things you look for when you are evaluating a sponsor, and how much weight do you really place on the quality of the sponsor versus the quality of the deal that they bring in?
Great question. So by quick background, I assume most of you understand that independent sponsors are basically private equity funds that typically don't have a dedicated fund. So they're out raising capital on a deal-by-deal basis. There are exceptions. We work with funds who have a fund, but because of our relationship, they take and co-invest. But the point is, we underwrite every deal one at a time. So we'll do 15 deals in this fund over the next 3 years. And we'll probably work with 7 sponsors that are repeat sponsors. Well over, and it's funny, Chris Elston, who works for me, who was a Tepper grad, and he was an intern for us, and he does a lot of our analytics. We've actually debated how much is sponsor quality. It's certainly 50% of an evaluation. It's the first line of inquiry. If it's not a good sponsor, it doesn't matter what the business is, we're not going to invest in it. Experience has taught me directly that a great business with a very average sponsor will do okay. A great business with a crappy sponsor can go to shit, excuse it. But an okay business with a great sponsor can still do very well. And so for us, it's all about sponsor quality. And so we spend a tremendous amount of time vetting sponsors. So Chris and my son are at a conference today in Miami of nothing but independent sponsors. We go to one in Dallas as well, and there's a third in New York. And probably 40% of our time is just networking, asking family offices or other funds who are great sponsors, what do they do? And then we keep a database and try and market to them. So when they have a deal, and they're looking to raise 15 million of equity, our 2 to 3 million is an important piece of that.
Right. And I'd assume it's easier for you to evaluate sponsors because of your experience as an operator. But maybe for your son now, who won't have the experience of an operator, what are some things you can maybe teach him to be able to effectively evaluate sponsors?
Well, this is actually one of the biggest questions we're wrestling with is, the notion as those of us who are a bit older, I think we deeply appreciate the value of pattern recognition in our lives. And how do we accelerate pattern recognition for a younger team? We have some ideas, and it's probably going to be a project for some interns to work on. But I think a lot of it is just getting reps, going, looking at a deal. We looked at 3 deals yesterday. We have a call on Monday where we have 2 other deals, and, they'll like it, right? And that's typical because they're the front line. They'll say, we love this. This is great. And, they'll get on the call with me or Steve or my dad, God forbid, my dad gets on it. And, they'll hear like 20 things they hadn't yet considered.
Yep.
And that's just the nature of it. But how can we build that is a big part of what we're focused on. That's the process side. How do we institutionalize knowledge that we all bring to the table?
Thank you. Maybe anybody else?
I had one additional question, if I could, Michael. So you talked a little bit about that experience where your family's business was purchased by another larger company, and then they were able to get 5x on the money that they had invested. So after...
Not sore. I'm not bitter.
Oh, no, sorry. Well, that's what I wanted to ask you about. Whenever it comes to a situation like that, what are some of the post-mortems that you guys do on different deals whenever it doesn't necessarily go the way that you wanted?
Well, this one was more deeply personal because it was ours. We owned 100%, and then I think we try in every deal that we round trip, where you bought and sold it. You try and evaluate how did it do against our underwriting. It never performs to how you underwrite, ever. So the question is why? Where did you miss? Did you underestimate? Did you overestimate? And so, yeah, we're constantly trying to understand so we can help improve what can we be looking for on the front end as we're making decisions. And that's the hardest part of investing, right? My dad loves to joke, or you guys are like, buyers at the casino with a stack of money. It's like, I can't wait to put it down. And that's actually not our mindset, but that's the fear, is as an investor, you're a buyer. You want to find things, and so you can fall in love. So I don't know, again, if that answers directly the question, but the post-mortem is a really important process.
You've kind of mentioned off and on throughout the conversation about setting up like clear objectives and processes. Would you be able to provide me some more clear examples of a time where you've set a goal and that process and how it was able to kind of prevent kind of change of scope or whatever it was within the fund or within your business beforehand?
Sure. So when I took over in our family office, we have a pool of assets that we're investing. Well, what are we trying to do with it? Right, and so we set out with a policy objective statement, which is a pretty, first step. How much do you need to make? What are you doing by asset allocation? What's your buckets? How are you then managing through that? Within each bucket, what are we measuring success by, and how are we going to go about it? Then, once you have your policy objectives, which should align with your longer term goals, then you have to decide. You typically are an as is, and you're trying to move towards a to be, right? You're either over allocated, under allocated, or something else. So you have to have an action plan. How do you execute that? Who's doing it? And what's the process through which that? And then having constant reviews. As we set up the fund, which became an operating business, it wasn't just a passive asset allocation business. We literally had to set up entities. We had to have third-party administrators. It becomes a project management like anything else. We have clear fund objectives that we're trying to meet, not just from an investment return, but how many deals are we looking at? What's the quality of the sponsors that we're meeting? How many new sponsors? So, if we want to make 15 investments over the next 3 years, we want to have, let's call it 400 looks at A quality deals so that we can really pick the ones that we're deeply passionate about. So it's just driving, which sounds routine, but in a family office, in a family investment office, we're actually part of a Pittsburgh family office network of many of the largest. It's actually shocking how little process like that exists. So, we don't think it's just the way you'd run a business, but that's what we do.
Okay, I think we'll go here, and then I'll ask a last question.
Thank you for coming to Tapper. As the next generations, how do you establish credibility for your employees that probably know you since you were a kid?
Yeah. That's it's not as much of a problem for me because I set up the office, but for our son, it's definitely an issue, and we've talked about it. And I think it's a matter of, I think it's more in your head coming in, I think, than it actually exists. I think what I've found in our small office environment, the people that are non-family are excited that the next generation wants to get involved because A, they care. If they've been there a while, they care, not just for their job, but for the success of the family. So for people working in a family business, my experience is they actually care a lot about the family. So next generation coming in is a positive. I think coming in, you have to feel confident that you're going to work hard. You're not going to be privileged. You're going to demonstrate that you're willing to do whatever it takes. And if you do that, I think people generally accept that. I can tell you when I started with my dad, and it was a small business, I wrestled with the need to prove myself. And it actually can become destructive. And it was just, you know what, show up, work hard every day, you know, make the mistakes, own the mistakes. I find most people are comfortable with that.
Great. Michael, I'm curious to hear a little bit more about the Tree of Life project. You have so many constituents as a part of this project, and you're delivering on so many needs and goals and really important ones. How are you thinking about what this project will deliver to Pittsburgh and then the other constituencies that you're working for and with?
Yeah, well, thank you for that. It's the hardest thing I've ever done. I can say without question. Taking on, I took over as the chair of the Tree of Life in November of 21, which at the time we had a vision. The congregation had hired this world-famous star architect to develop a beautiful building, but they had no vision for actually how to pay for it, what was going to go on, and what it was going to be. And so we worked really hard to understand, and as you mentioned, the constituencies. You have the families most directly affected. So 11 were murdered that day. So we work closely with all their families. We have the Jewish community of Pittsburgh that was traumatized that day. We have the region, the city of Pittsburgh, which responded to the tragedy in an unprecedented way and feels deeply attached to what happens there. We have the nation. I mean, the fact that Noah Wiley on The Pit decides to make a storyline a month ago about the Tree of Life tells you it's a story with deep resonance. And so we've really had to understand, and it's very entrepreneurial, right? Everybody assumes there's lots of money out there. There are lots of big wealthy donors. Raising the money won't be an issue. Raising the money has been a monstrous lift. And we're at $50 million against a $60 million goal. And I can tell you, you talk to major Jewish donors, of which there are many. Why Pittsburgh? We don't need to be in Pittsburgh. Everybody has a reason. So the money's hard, and I've always believed in business, and it's no different in this. A great vision that people can believe in, money will follow. The simple idea that something bad happened and we need to build it is not going to make it successful. And so we really worked hard to understand why we should be here, what's our right, what's our lane, what's our unique voice that we bring to the discussions of a highly divisive nation right now. And we think that we've landed on something. So we launched a campaign called Rooted in Humanity. And we think that what this nation is hungry for, and it's not just to combat anti-Semitism, but all forms of hate, is that, just below the surface, just below the ground, we're connected. We're all hungry for a sense of safety, belonging, being seen, and that when that safety, literally a murder in a sanctuary, by definition, is supposed to be a place of safety, that's bad for everybody. If sanctuaries can be penetrated by violence, we need to stop that because that's a danger for this country. And so we think the Tree of Life is a story of how you fight back, and that we're not going to be defined by the tragedy, but the response. And so we've been able to get the families bought into that, major donors, the state, the government, federal government, and we're well on our way, but has not been easy. I don't know if that addresses.
It sure did. Yeah. I'm sure we're just scratching the surface of your experience.
Yeah. 5 years of
Thank you. Thank you. Charlie did a great job moderating.
Well done.
Yeah.
Thank you.
Thank you to Michael. I don't know if you noticed the people taking notes. I've been teaching here for 6 years. This is a rare occurrence, the note taking. So a very powerful conversation. Thank you, thank you, thank you.
Thank you, everybody. Appreciate it.
Michael.